Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today is the 9th of August 2019, so welcome everyone, welcome to this Friday's afternoon session where we're going to have a quick look at the markets, a few of the charts that we looked at this morning, and see how everything's getting along. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, but specifically our JFD research page, in which you can find a lot of useful stuff, because we throw out different analysis during the day, of course our main morning analysis as well. So, and like I said, please check us out. I believe you can find something useful here. So for now, let's jump into the charts. Now the first one I want to touch on here is the Nasdaq100. I talked about this one yesterday in my Traders Tea Time. And basically what I was saying, that if we see a good push away from the above the 7,600 level, then in a way this increases the chances for this one to push further, and especially if we also get a nice good break above the 7,645, which all kind of happened nicely. So we got our nice break here initially through the 7,600 level. I mean, it opened with a nice gap here, slightly above that level. So, and it continued pushing higher, above the 7,645. And this is where I was saying that the next target for us is around the 7,770 zone. Now, we're going to keep it only up until here for now. This is where we got the around there we got the 50 EMA here shown as the red line on the 4-hour chart. It's going to be very interesting to see, because I mean, of course, the cash index has already recovered all of its all the week's losses, so all the Monday's losses and Tuesday's losses. So in a way, of course, all this kind of creates this very interesting and tricky atmosphere, because in a way we might just not see a lot of movement today. Maybe all the action could be left for next week, and we could see the weekly candle kind of closing maybe with something with a doji, but I'm talking about the cash index, of course, and because this one here will be slightly different. So anyway, in other words, for now, of course, what we're going to do here is we're going to aim only for the 7,770 zone. I do understand it's only about around 50 points away from the yesterday's close. And actually, looking at the cash index right now, we can see that the index has actually slid back a little bit here, and looking at where it is right now, it is currently sitting at around 7,680 zone. So if we get a nice if the price stays around there during the opening hours, then yep, we will see a nice little opening here lower. So for now, again, we're going to be very careful here, because like I said, as long as it remains above the 7,600 level, or even actually better, 7,645 level, if it remains above that, then any little kind of throwback, we will consider that as a temporary correction. If it passes the 7,645 level, this little territory between the 7,600 and the 45 will be our little neutral territory, because if we see a drop below the 7,600 zone, and then then you see a drop below the 200 EMA here on the 4-hour chart. This is where we will again consider a possible move to the downside here to test, possibly test this upside support line taken from the low of the 24th of December. So you can see that this week it acted as a fantastic area of support here, and from which the index kind of pushed to the upside. So that's why, guys, for now, again, like I said, we may see a small little pullback, throwback here, but still, as long as it remains above the 7,645, we will kind of class that little throwback as a temporary correction before another leg of buying. And but only we will only aim for initially we'll only aim for the 7,770 zone. As you can see, previously it acted as a good area of support. Now it could take the role of resistance. If, of course, if that continues to push above that, then I mean this is looking quite bad for the bears, and we could see maybe this one traveling actually all the way back towards the all-time highs, or even actually going a little bit further up. But also further up, keep your eyes on this little line here that in a way could provide some initial resistance. So, but again, that's a very, very tentative one, so you just keep it on your chart, but do not rely on it too much. For now, like I said, we're still we're going to be very cautious here today. Like I said, if it stays above the 7,645, then we will aim for another, we will aim higher, still a little bit higher, not much, only up until the 7,770. So keep your eyes on that one. WTI, I also talked about this one. I talked about this one yesterday in my traders tea time, and basically what I was saying is to keep an eye on this downside line, and specifically keep your eyes on this 53.72 zone, which, as you can see, currently is getting broken, and the WTI is traveling to the upside. So what I was saying, that until we're kind of trading, what I was saying yesterday, until we were trading below this downside line, we're going to be very skeptical about the upside. But if we get a break initially, then yep, we'll aim for higher levels. But just for that better confirmation of the upside, we need to see a push above the 53.70, 72 zone, approximately around there. And as you can see, this is what's happening right now. The commodity continues to rise. Our next little short-term target is going to be around this 50 EMA, which is around the 54.40 zone, approximately around there. But to be honest, if it continues accelerating, it may as well reach today's R3, which is around the 54.75. But still, our better targets are these two here, the 55.40 and the 56 zone. So which mark the high of the 6th of August and the 2nd of August, respectively. So that's why, guys, for now, of course, if it continues to trade above this 53.70 zone, then yep, we will continue aiming to the upside here, at least for a little bit more, because the reason why I'm saying that for a little bit more, because even if it, let's say, travels all the way higher here and actually reaches our 56 level, this is where it could also meet the 200 EMA here on the 4-hour chart, and this is where that good hold up could occur, of course, and then we'll take it from there, see what he wants to do after. But again, let's not we'll have a look at it then, but for now, like I said, from the very short-term perspective, for now we are kind of climbing higher. Initially we're aiming for this 50 EMA near the 54.40, and then we'll aim for the R3, today's R3, near the 54.80 zone. So actually let me reiterate that 54.75, approximately around there. And this is, I'm talking about for today. If it stays here, if it, let's say, closes the daily candle here above this 53.70, then it increases the chances for for this one to move higher next week. So like I said, keep your eyes on this one. If this suddenly, let's say, reverses back down, and let's say closes around here, it closes around here, maybe let's say slightly below the 53.70, this is going to be our little kind of somewhat of a neutral territory. Then we'll just continue observing it again, and then we'll wait for another push above the 53.70. If this suddenly drops back below this downside line, just let's say something happens and see a drop, we'll keep an eye on this little level right here, the 51.9091 zone, approximately around there. If we see a drop below this, then yep, we will aim for slightly lower levels here. So so keep your eyes on this one. Very quick mentioning on Ethereum. I'm not going to spend too much time on this one, but just wanted to kind of run it past you guys. Looking at this 4-hour chart, you can see that it is well, after failing to kind of push above the 200 EMA and push above this 235-36 zone this week, it decided to retrace back down. I talked about Ethereum in one of my previous videos about a week ago, and basically I was telling you about to watch out for this level right here, because we needed to see a nice good close, ideally of a daily candle above this 236 zone before kind of aiming for higher levels. We never got that. We did have our breaks, but never got the close. So as you can see, the crypto started retracing, dropped, it retraced all the way and dropped below this this upside support line. Now don't get me wrong, this could be seen as a bit of a tentative one, this upside support line, but because some of you might have it right here, and where you're capturing this little low, this little drop of the 28th of July. So in a way, this kind of creates this this atmosphere where the crypto is still kind of, or should I say, the bulls still have some chances for jumping in and pushing this one back to the upside. But again, like I said, for now, to be honest, how we could look at this, to be honest, we could actually get rid of this upside line, and what we could do here is just look at this as somewhat of a range. So not an ideal one, but still kind of overall we could see this as a range here. So in a way, it's kind of currently moving a little bit lower here. So for now, we are going to stick more to the downside. We're going to aim for some of these levels. If we see another drop here towards the 205 zone, 204 zone, a nice good break below this could in a way open the path towards the areas slightly below the psychological 200 level, and this is where we could aim initially for this low of the 28th of July near the 197 zone, and then the next target for us is could be the low of 16th of July, or in other words, the lowest point of July, and that's around the 190 mark. So again, it's for now, you can see that it's sliding. It's already below all of its EMAs on the 4-hour chart here, and in a way this kind of could continue moving lower, but again, we will only aim for the 190 zone. After that, we'll have a look again and see what it wants to do after that. With the upside, we're going to be very conservative here and wait for a break above the 236 zone before kind of targeting higher levels. USDCAD, now very interesting here. Of course, if you're following the economic data, we did get very bad numbers from Canada, and initially you can see that this is what I was talking about this morning, basically, and you can see that we had a nice spike here to the upside. So what I was saying, if we get a nice push above the 1.3267, then in a way this increases the chances for the bulls kind of to push this one further up. But as you can see, we did have this brief overshoot here during the data release, and I'm sorry, after the data release, and but you can see that the bears quickly managed to bring this one back down, back to almost to the same levels from where it took off, and the most important thing is that it's back to its upside support line. So for now, again, like I said, we're going to be very careful here. We're just going to continue observing some of these key potential breakout points. In terms, you can see that this is now trying to kind of move back down. If we see a break of this upside line, then and a drop below the 1.3208 zone, approximately around there, then yep, we will consider this level here as the next potential area of support near the 1.3172 zone, approximately around there. But if this gets broken, now this is where it could become a little bit more exciting, as we could see a further decline towards these lows near the 1.3109, which kind of are marked by the lows of the which the level is marked by the lows of the 25th of July and the 31st of July. So near that level, of course, near that low. But like I said, this is what we will look at. But again, for now, as you can see, it still wants to continue balancing above this upside line. Let's see how today's candle is going to close and how it's going to be formed. If we see a drop below this upside line, then yep, we'll consider slightly lower areas initially, because this area for us is more of a cautiously bullish, cautiously bearish, I would say. But if we see a drop below the 1.3172 zone, now this is where we will become a little bit more bearish, I would say, and we will aim for these lower levels. For now, like I said, it's stuck here. Let's not experiment here. Let's wait and see how which of the levels will get broken. Either we need to see a drop below the 1.3172 or a push above the 1.3267. So keep your eyes on those. EURCAD, very quickly on this one, also had a nice spike initially after the data straight away, and but now you can see that the bears are pushing this one back down. This is what we've posted here this morning on our TradingView account, and this was the idea. Basically, it was still kind of hanging around here, and you can see that now it's kind of almost back to the same place where it from where we kind of posted this one. So again, similar story. We're keeping a close eye on these two potential breakout points. We need to see a clear move above this before, let's say, above the 1.4862 before we could examine some higher levels. We're not going to push this one drastically to the upside, because as you can see, overall we're still trading below this a bit of a tentative downside resistance line taken from the high of the 31st of May, and then we'll take it from there. If we see a push above the 1.4862 level again, then yep, we will consider this downside line as our next important target. If this, of course, decides to drop lower here and drops below the 1.4757, this in a way increases the chances for a slight move lower here again. Initially, the big question will be around here near the 1.471615 zone, because as you can see, it previously acted as a good area of resistance, so this time it could take the role of support. But even if this fails, then yep, further declines are possible towards the 1.4654, 55 zone, approximately around there, guys. So keep your eyes on this pair. And the last pair I wanted to quickly touch on, and that's GBPCHF. I talked about this one this morning as well, and what I was saying, that we need to see a drop below the 1.1792 zone before kind of examining further declines, and this is what we've got. We had our nice drop. The next target for us, but by the way, before I actually go into the next target, you can see that it managed to reach the S3. Today's S3 had a perfect test. That was around the 1.1723. Just let me double check, 22. So we had a nice test of this area, and now, I mean, you can see that the bulls are kind of fighting it back. They want to push this one back up. This is going to be very interesting to see if the daily candle actually manages to, let's say, close back above the 1.1792-93 zone, because if it does, then, well, I mean, this in a way increases the chances for maybe some recovery here going into next week, and we could see maybe this one pushing higher here. But again, just to get more comfortable with higher levels, ideally we would like to see a push back above the 1.19 zone, approximately around there, and only then kind of we will target this downside resistance line, which in a way could continue to hold the rate down. So that's why, from the very short-term perspective, what you could do here is, like I said, keep an eye on the daily candle today. This is a 4-hour chart, by the way, and if you keep an eye on the daily candle, and if you see the daily candle, let's say, closing back above the 1.1793 zone, approximately around there, then in a way this going to be quite interesting, could be quite interesting for the bulls next week. But if we see a push above the 1.19 zone, then we could in a way consider a possible, like a larger correction within this downtrend here, and we'll aim for this downside resistance line. But again, for now you can see this is where it is. If it stays here, then of course in terms of the upside, it would be difficult to talk about it. But in a way, if this continues, let's say, to slide, if it stays below this 1.1793 zone, in a way it could continue sliding further down. To be honest, I mean, the pound is very weak, and the next potential target here could be, and let me just jump into a daily chart very quickly on this one. The next target could be around here, the 1.1650, 50 zone, approximately around there, and that's basically the low here that we had on the should I say the lowest point of October 2016. So keep your eyes on that one. This 1.1650 could be a good target, something maybe more of maybe something more for next week, especially if this daily candle remains lower here below this 1.17 and 93 levels. Keep your eyes on that one. Okay guys, I hope you found it useful. I'll have to wrap it up here. Thank you very much for sticking around and watching until the end. If you want to join me on Monday, as always, on my Traders Espresso, and that's 6 o'clock GMT. For now, I hope you have a beautiful weekend, everybody, and I'll see you next week. Thank you very much, and bye bye.